Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. Merlin Rothfeld with you for your Monday afternoon edition. I hope you had a great weekend out there. It was rainy down here in Southern California, but we get that 1 or 2 times a year, so no complaints. Markets doing something rather interesting today. I'll explain that as we progress through today's show. Generally, there's an inverse relationship between the markets and things like the dollar index, and we're running in parallel right now, which is a break from the norm. So I'll check that out as we go. We're going to talk options today on our show for segments 2 and segments 3. Patrick Valle is going to be our guest. So if you have any options questions, now is the time. I think last week we were slated to have an option. We had Craig Weil in the program, and it was listed as it being an options instructor. And Craig isn't really, he's a futures guy. So we didn't really dive into options last week. We will today, though. So I went back in time and brought up some listener questions. Brendan, you had an options question. So did Frank. So hopefully I'll get through those on today's show as we progress. If you have some, feel free to send them on in at powertradingradio.com and click the little button there that says Power Blast. Send them on into the studio, or you can join our friends on our YouTube channels. We've got Jeffrey, Gaillard, Chadsbury, and Ruben on the Online Trading Academy's YouTube page. So hello, everybody. Hope you had a great weekend out there. On Power Trading Radio, well, we've got Brendan, Dunkster, Preston, and Redneck Trader. Of course, there's many others hiding in the shadows, but those are the ones that decided to say hello and be part of the discussion today. So welcome, everybody. Feel free to converse amongst yourselves or send in questions that you want me or my guests to answer today, and I'll do my best to get to all of them. Okay. Let's start off with the interesting one. And it's strange when we come in on a Monday morning and we look at something like Bitcoin and say, Bitcoin's down 2.74%. It's the worst performer today. Well, what you didn't realize is, remember, cryptocurrencies trade 24 hours a day, 7 days a week, 365 days a year with no breaks whatsoever. That's very unique, especially when you look at things like the Forex markets, which you think money's trading all the time. No, actually, the Forex markets do have little windows of time where they are closed as well. So today, we start off with our worst performer here, which is Bitcoin down 2.74%. You think, oh, man, that's pretty bad for Bitcoin. 9,842. Yeah, but look where we were over the weekend. We were over 10,000 again for Bitcoin. That's pretty significant. We were at 10,188 as of 4 p.m. yesterday. Today, right now, down 2.74, but still looking rather good. There's a lot of people that are wondering when Bitcoin's going to start its big bull rally. I know that some of our viewers are very bullish on the cryptos. I think you may see the start of that rally happening right now. So Bitcoin is your worst performer, down 2.74%. Next on our list, we'll go over to Click and check out the 10-year Treasury note. Here's the futures. Now, you guys recall last week, we came right up in that area of supply that we saw back in October of last year, right? We had drawn a descending triangle across this, and we came smack up to it, sold off aggressively on that 10-year Treasury futures, found a little bit of a base apparently, and rallied over the last 2 sessions. You can see that nice big green candle on the futures. That means that the yields dropped again. We dropped 1.96% on that 10-year yield to 1.547, making it your number 6 performer on the day. All right. Crude oil brings in your 5th place. Let's get that CL chart up here. Crude oil right now trading at $49.59. Now it's back down below that $50 mark. I actually thought we would get a more substantial bounce off that 50 level. We're forming a double bottom kind of as we speak right now, which is not the best. Very short term. We'll see how that one pans out. But it was down 1.33% on the day for crude oil. Is again making your 5th place finisher down 67 cents per barrel. So I guess this is probably one of the more talked about ones. We'll probably talk about this chart a lot here in the near future. I'm so close to buying. I just really wanted to buy some call options on CL or USO. Maybe even just buy some outright futures contracts. But I'm just still a little skeptical on this big downturn. I feel like you're trying to catch that falling knife. So I'll let you know how that plays out if I decide to jump on this one or not. All right, let's go to number 4. Commodities staying in the hunt here. We've got gold, which was up on the day ever so slightly. I guess technically it's not the greatest considering we had those 2 huge down days and slowly building back up here with 4 positive days in a row for gold. It was up 0.13%, a gain of $2.10 per ounce. 1,575 is where it finished at, and that is exactly where it's at right now as well. So we actually do have some exciting news with regards to gold for Power Trading Radio as well, but I want to let the cat out of the bag, but I just can't do that yet. Maybe later this week I will let you guys in a little secret or a fun event we're going to hopefully start to do here on Power Trading Radio involving gold. All right, it's podium time. Russell 2000 takes the stage at the bronze medal winner. It has had some very sharp, aggressive moves lately, really respecting those supply and demand zones. You guys can see that the bounce we saw back on February 1st, right, that first bounce day, that was right into an area of demand that goes back into December. The sell-off we just had for, well, it was one aggressive day, was right in an area of supply on going back to, February 6th. That was going to a supply level that went all the way back to January 24th. So really respecting some nice supply and demand zones. Right now, you had a nice spike up today in the Russell 2000. Really, all in all, a pretty good day for the equity indexes. 1,668 is where the Russell finished at. That's a gain of 0.66% on the day. It's all indexes, as clean sweep of the podium. Haven't seen that too often. Here's the S&P 500. On the day, the ES showing a very interesting candle. I'm going to have TJ zoom in on this one so you guys can see the full magnitude of it. Closing right at the dead highs. That is a very positive sign, meaning the enthusiasm going right into the close, no real sell-off at all. A very big engulfing pattern as well, as this green body here completely engulfs the previous day's trading session. So that is, again, another very positive sign for those of you who are bullish. S&P finished up 0.73% on the session. 3,352 is where the S&P closed out at. And, when we zoom out here, you really have sky's the limit at this point. It's crazy to think that this market still has legs underneath it or momentum out there, because what's driving it? I don't think it's earnings. I'm not exactly sure what's driving it. All we know is it is moving, and can't argue that trend. So that was number 2, was S&P 500. Thank you to Microsoft and Tesla. You had the NASDAQ 100 looking pretty sharp today. All-time highs intraday and all-time closing highs for the NASDAQ 100. Sorry, I got a wicked cough going over here today, apparently. I don't know what's going on. All right, so all-time intraday high, all-time closing high, similar to what we saw with the S&P 500. However, this is a much more robust candle. And again, Tesla had a great day today. You had Microsoft really pulling this one up as well. So those NASDAQ 100 components really helping out on this NASDAQ 100 futures. The composite up 1.13%, finishing the day at 9,628. So a 100-point move up there. You gotta love it. Yeah, Brendan says, what's driving it? Money printing. Certainly, that could definitely be a factor for this current market rally, but we've been saying that for quite some time, so I'm not sure if that's the only factor. I think there is more going on to it than just the printing of money. There's some underlying pieces out there, lots of optimism. Apparently, to me, it's just institutionals pushing it up. All right, let's see. I have a minute and a half left, and I'm going to go not to a commercial break, as TJ wants me to go to a commercial break. I'm going to go and look at RIG. So this one comes in from Alec. Alec, thank you for sending the question. It's an interesting one that I've talked about many times with regards to different asset classes and belief systems that we have. So let's go look at RIG. I'll bring up the chart of RIG here. Transocean Energy is the symbol. He says, when a company like Transocean keeps dropping like this, do you ever buy as a long-term hold knowing that we'll go back up eventually? First off, Alec and others that see a situation like this, you can never say it is going to go back up. This company may go to zero. I don't know enough about the fundamentals. Now, there are people who will scour through those fundamentals and look and see, are they at risk of going out? But what people love to do all the time, they'll look at a longer-term chart like this weekly and say, hey, I'm noticing that RIG was up over $100 back in 2009. I think it was 2009, actually 2007, when RIG was up over 150 bucks a share. And they'll look at this and go, wow, I got to go buy some RIG. Well, no, I think the trend is our friend here, and it's just simply showing that it's ugly and down. One thing you could look at would be maybe its book value. There's a lot of different ratios or metrics we can look at, but the book value I looked at for RIG was 0.23. That means that right now the share price is 4 times higher than what the valuation of their assets, if they were to sell all their assets, 4 times less than the assets if they sold it right now. So right now the expectations for RIG are not good at all. So no, the answer is I do not just blindly buy something thinking it's going to go back up to a previous high. If Transocean RIG started to stabilize and stopped trending down and maybe started putting in some new highs, then maybe I would put this in a risk account. But there's something obviously much deeper with regards to Transocean that I'm unaware of, and it's beyond my study of fundamental analysis or this industry specifically. I'm a pure technical guy, so I really would just stay away from this one. If you are buying long, That's a pure gamble play, and I would be very, very careful with that because the way this looks, it looks like it's going to zero. Maybe somebody will buy their assets, but at what price? Is that going to be at $1, $1.50, $2 per share? I don't know. Transocean just doesn't. It looks like a sinking ship, like that. Nice. Tying it all back in with an ocean reference. All right. That will do it for our opening segment. When we come back, we're going to have Patrick Valle on the program talking options. So if you have any options questions, feel free to send those on in at powertradingradio.com, or you can join our guests on social media. We've got a bunch of you guys out there all chatting back and forth. So cool. Keep it coming. Send in questions regarding options for Patrick Valle and myself, and we'll be right back after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
Is just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. We're not quite there yet, but now we are. I'm all over the place. It's Monday. I didn't even get the microphone on my guest. Welcome back, everybody. It's the beauty of live, unrehearsed. I know some of you guys actually watch podcasts and other shows on the web. So many of them are recorded and then edited down. All the little mistakes and everything are taken out. I think the mistakes are part of the fun of the show. So thank you for enjoying my mistakes today. We have Patrick Valle here in the program today, teaching options in Irvine, right?
Yeah, I'm actually teaching options, but in a class called Strategic Investor.
Okay.
Which is it's a wealth management class that employs a couple of option strategies. So it's kind of like options light. We go lightly into the world of options.
And I think, I have to dovetail on that one because we've been doing so much redevelopment of the content. It used to be a lot of content word-wise, but we've turned it a lot of graphics, making it much more visual and structured. We talk a lot about options kind of being the Swiss Army knife of assets out there, where you can be using it for almost every purpose, whether the market's going up, down, or sideways. I think the main focus of options in Strategic Investor is going to be generating stable, safer income streams and protecting the portfolio, right? So you're not looking for the big grand slams with options like some others are.
Absolutely, and that's actually one of the things we talk about with the students, that one of the things that you give up is the ability to hit a home run.
Right.
So consistency, high rate of return, increase the rate of return, but doing it conservatively, if you can use that word in the world of investing with options. It's a great strategy if you don't, use leverage. In other words, if you don't use a margin account, you want to do it in a cash account.
Right. All right, let me go to, real quick, there's a question from Eric. He says, general question for the room and Merlin. No, Merlin no longer teaches normal classes, but what about signature or specialty classes? You know, the thought has come up. I'm just so darn busy on a regular basis that building content that I don't get out much. Actually, really, ever since we started doing the show, which in April will be 10 years.
Wow.
I've taught some online classes, but yeah, I don't know. I'm so darn busy. What specialty signature series would you like to see me teach? Let me know that one. There we go, right?
Yeah.
Instead of
good
me
question.
telling you what I want to see, how about you just come up with a suggestion for me? Maybe we can make that happen for you. But I appreciate that. It's nice. Let's go to some listener questions. Now, it's an options type of show today, so again, if you have options questions, let us know. There is a question that came in from Frank, I think last week. He says, Merlin and guest, in layman's terms, can you explain negative gamma, specifically with regards to oil and its recent sell-off over the past month? I was able to catch a bit of the sell-off, but ultimately missed the longer-term, the more extreme drop. What does this negative gamma have to do with outstanding oil options, and would it keep driving price lower? Negative gamma is a superhero coming out from Marvel next year. They're releasing that one. No, I'm kidding. Negative gamma, explain it to us.
Yeah. So great question. So gamma applies to all options. So when you think of gamma, you really have to think of it as like it's going to impact all of the options, whether it's crude oil, anything you're trading. Gamma is actually, I know you're saying to explain it in layman's terms, but unfortunately it's a little bit of an advanced concept, but it's the rate of change of delta. So what it is there's delta, which gives us the directional bias, whether you're bullish and bearish and how bullish or bearish you are. And then there's that gamma, which is a derivative of delta, so it's the rate of change. And the way it works is whenever you buy options, you get positive gamma. So the rate of change of delta goes up when you buy calls and puts on any underlying. On the other hand, if you have negative gamma, what that tells me is you most likely are selling options. So what that means is as the position is going against you, you're going to lose money at a higher and higher rate. It starts to work against you. On the other hand, if you have the positive gamma, the rate of change is in your favor, but then you're fighting against time. You're fighting against time decay.
You're always fighting something.
Yes. Yes.
So in the case of crude oil, you know, you were mentioning it with crude oil, and I think, if I'm not mistaken, it may have been with this recent sell-off, this one here that TJ is kind of highlighting going back to October, I believe. No, sorry, this is a monthly. Let's go back to a daily, TJ. There was okay, so that sell-off that's been going on and on since, go back to January with this big sell-off here in crude oil. So I'm assuming he's looking for it specifically with reference to that. So you said you were able to catch a bit of the sell-off, but ultimately missed the longer-term, more extreme drop. What does negative gamma have to do with that outstanding oil options? Well, I guess you explained that because it really is, it does with every option, not necessarily just oil.
That's right. Yeah, and also, by the way, with gamma, it doesn't tell you direction.
Right.
So you can have negative gamma and have a bullish or bearish trade. All it tells me is that you're most likely selling options because that's how you get the negative gamma.
That's when the Dunkster says gamma equals acceleration. I guess you could look at that
Yes,
way. Yep.
there you go.
So there you go, Frank. I'm not an options guy, so that was all news to me.
Sure.
All
good.
All right, so let's talk about your scenario today. You've been obviously watching these markets. You're a strategic investor today, so you have a little bit different perspective. What are some of the things that you're paying attention to that you noticed today that were noteworthy maybe for our viewers?
So one of the things I was paying attention to, I mean, other than the fact that we just broke out to new highs and the market just seems to...
It's funny because we say just, but it's literally like, okay, again.
And I keep joking with students, but it's like nothing causes the market to go down, right? So what's interesting to me is I wrote some of these down is I'm looking at some of the sectors because we deal with ETFs in this class.
Right, okay.
We really focus on that. So the best performing sector year to date is technology, XLK, followed by the triple Q, also technology, NASDAQ 100. Yeah. So that's an interesting group of leadership. But what's interesting to me also, in addition to that, because of course those are going to be your, your Apples and Microsoft.
Your FANG stocks are in there for sure.
Your Amazon. But the next category beyond that is Treasury bonds, TLT, XLU, which is utility stocks, and IYR, which is real estate investment trust. Now, what's interesting to me is that is showing me that there's kind of like a flight to safety. Even though tech stocks are kind of the outlier and they're doing well, it tells me that people are wanting to make money, but they're also trying to be safe and going into the treasury bonds, which definitely are kind of like a flight to safety when people get nervous. So typically when the market goes up, Treasury bonds are inversely correlated, and normally they would act in the opposite direction. That's why it kind of stands out to me.
Right. I'm actually building a chart right now, so if I look preoccupied, don't worry. I'm
Sure.
I'm loving the
Sure.
conversation. I'm putting on the 4 that you mentioned, which are technology, bonds, utilities, and then we'll look at add the IYR on there, TJ.
IYR,
IYR. Just so you guys can see the relative performance of these two together. And this is something that I think everybody should be doing as far as an analysis piece.
Yeah.
This is a simple, free, easy resource. You guys can get it. You go to stockcharts.com. It's called a perf chart. And let's go back. This goes back to last 200 days. How far back do you want to go?
Yeah.
Let's just go back to the beginning. Is there an anchor point that you want to look at?
Well, the anchor point, I'm specifically looking at year-to-date performance. Why I do that? Because I kind of feel like every year is different.
Right.
I also look at a website called Novel Investor, which gives me the year-to-date performance from year to year of each one of these assets. And the whole point is you never know what asset's going to outperform.
Right.
But every year kind of starts fresh, right?
Every period of time starts.
Yeah.
I mean, it's just what measurement are you looking at, right?
Exactly. So I'm looking at year-to-date because that kind of tells me where the money's going this year.
And this reflects exactly what you talked about. That red line there is the best performer, up over 8% since January 1st. That's technology and XLK. And of course, this is why you're seeing that NASDAQ as the best performer. It's making all-time highs. It's closing stronger than anything else. Real estate, interesting. You're right. You look at utilities and treasuries. It's bizarre to me that you have one equity portion of the market, which is the technology side. That's the red line. The other 3 here are really more defensive, typically inverse-related plays. Is there a disconnected? Is there a reason that this makes that you're focusing on this? Because to me, it seems like a warning sign.
That's exactly right. And that's why I'm looking at it as a kind of warning to me that people are like, I think something's going to happen pretty soon, or we might get a big sell-off, but, maybe they still want to make some money in the meantime with these, these Amazons that keep, breaking out to new highs and stuff. So they're nervous. They're a little bit defensive, wanting to get into some of these safer plays.
Now, when we look at this is where we have to make an assumption, right? You have an equity portion of the market, in this case technology or the NASDAQ 100, which is really soaring. Of course, all the indexes are soaring, but it's a case of the rising tide seems to be floating all boats. One of the points I was going to make today on the show, TJ, bring this one up. Normally, when you have equity markets rallying really strong and aggressive, the dollar is getting weaker. Right? There's an inverse relationship historically. Yes. So bring up the dollar index, TJ, just so our viewers can see what's been going on with the dollar since January. Very bizarre. It seems like everything is going up.
Yes.
Right? There's normally something that's getting beat down and inverse related. The dollar's been soaring since January. I know it doesn't seem percentage-wise. We're at 96.40 on the Dixie. Right now we are looking at over 98.80. Very, very, very strong for the dollar, that move in just a very short period of time, in a little over a month, and you're seeing such a ballistic move. Normally that would coincide with a selling off of the equity markets, and unfortunately I can't put these on top of each other, but what do you attribute this to, or what are your thoughts on it? Because you at some point one of them has to give. You can't have everything defensive being the strong one and everything technically. Something has to give. Where is it going to give?
It's a great question because I'm even looking. So I got one more ETF to point out, and that's gold, GLD. Now, you would think gold would probably not necessarily be going up. It is. It's actually up. It's not up that much. It's up 3.5%, but not too bad.
I added to the list. That's 200 days. We were at 27 shows since the beginning of the year, so go back to that one, TJ. 27, 28, somewhere in there. There you go. 29. That works fine. Wow.
Yeah, so to your point, this is not normal, and to me this kind of just means that it's like there's a lot of money flooding in right now, which may not last that long.
Yeah, and for me, I'm not going to say I'm a perma bear, but I'm always the one who's looking for the sellouts because I know they move faster and they're more vicious to the downside. I'm just wondering what is going to break here soon. If you look at market cycles, and there's always that famous chart of market cycles and how those correlations work. This lines up appropriately with a sell-off. It basically talks about a market top is when you have utilities at highs, you have bond prices at highs. That's a sign of a market correction. But it's just not happening. And until it sells off, there's no point to think that it's which one of these is right. That's the tough part. We have to make that assessment.
And that's the toughest part because as we talked about earlier, we keep making new highs. So at some point you got to say, well, you got to just participate. You got to make money in this environment. You're not going to get bearish too early. But it is definitely a warning sign for the market's acting the way they probably should not be acting.
Yeah, Ruben says it's a good point. He says it will all rip until it free falls. One of our presenters did a presentation I was just blown away at, and he talked about it's the first time in his life he's seen a triple bubble form at the same time. And to be honest, I think the bubbles are still inflating. They have not popped. But when they do, it should be something rather fun to watch, and hopefully we're on the right side of that one. Guys, we got Patrick Valle here as our guest today. If you have questions for him, feel free to send those on in at powertradingradio.com. Click the button that says Power Blast. I see I got a couple there, so I'll get to those right after the short break. If you are on our YouTube channel, say hello to everybody on Online Trading Academy's YouTube page, as well as Power Trading Radio's YouTube channel. There's a bunch of you guys that are very, very active. Some of you guys just sit in the shadows and listen. Join in the discussion. Be heard. This show's here for you guys as well. So stay tuned, everybody. We'll be right back after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rothfeld in with you for your Monday edition. We have Patrick Valle here. He's teaching Strategic Investor. We actually did a whole revamp of the content, much more structured, much more streamlined, much more visual. As Eyal Shahar has given us a directive for years since we started this, we always want to have the best content out there to make the teaching, the learning process much easier for everybody involved so that anybody can understand this content and apply it very quickly. We were talking about Strategic Investor. We're also talking about options. So one of the questions that came in from Brendan out there, he knows that he goes through the Power Blast, you get those questions answered sooner, and of course, where is it? It was right there. I believe it was, this is from Brendan, how do you select your strike prices?
That's a great question, because in the world of options, there's really no perfect strategy, but there's always trade-offs. So it all depends on how directional you want to be. So for instance, if you want to be very directional and you want to have more exposure to a move, then you're going to buy a in the money option that has a much higher delta. There's no perfect number I can give you, but if you wanted to do something deep in the money, maybe a 75 or 80 delta, something like that, means that you're going to choose a strike that is quite a bit in the money to get that directional move.
Okay.
But if you're trying to take advantage of just like a normal move and use more leverage and not tie up that much capital, a lot of times it's better to just choose a option that is slightly in the money, meaning that it's just close to at the money, and it might just be maybe like a 55 delta, 60 delta. So we look at delta to kind of help us a little bit with that.
And I think it ultimately has to do with what your goal or objective is for that specific trade. I know that you have trades where you're looking for, it could be a much higher risk trade. So you could be going, way out. I guess, again, it all depends. And I know, Brendan, you probably want a specific number here.
Yeah.
Whether we're doing short-term daily stuff or long-term, each individual person's got to make that decision themselves as to where it is.
Absolutely. And the other thing I'd like to point out, and this is something we talk a lot about in the 5-day class, is the concept of volatility. So volatility is also something that determines what strike price you're going to be using. If you want to take advantage of options that have the highest bang for the buck volatility-wise, then you're going to choose strikes that are either at the money or slightly in the money, because they have the most potential to inflate. That volatility really inflates the premium of the option.
Now, your style is what? What would you define your style as? You have a specific style?
I definitely have a style. I mean, I learned this from another fellow instructor here, but I use a lot of debit spreads and credit spreads.
Okay.
And what I do is basically take advantage of volatility swinging from one side to the other. So when the premiums are cheap, which they tend to be right now, it seems like the volatilities are on the cheap side. I tend to do a lot more debit spreads.
Okay.
But when we get into some kind of a panic situation and there's enough premium, enough profit to be made, I can easily shift to doing credit spreads. And for example, in 2009, all I did was credit for like probably a year and a half, because the VIX went to 80 something,
Right, yeah.
and there was no reason to buy options. When
Right.
they were that
Super expensive, so let me sell those ice cubes at a high price.
That's right.
Now, you mentioned VIX in there. Is there, like, how critical for you as an options guy would you say VIX plays into it? Because for those who don't know, VIX is simply the puts and calls on the S&P 500, and a lot of people call it the fear gauge. We've been, stuck in that 10 to 12 range for quite some time, which is very low volatility. Sellers of options generally are going to like it when you have VIX very high. Of course, over 40 in this day and age is a pretty high VIX. We saw it really spike up significantly to, or I think it was close to 100 on the VIX in 2008, 2009. So how critical is it to you in your decision-making process? Mildly extreme?
Yeah, I always say I like to look at the VIX just as a sentiment for what is going on in the market, but I'm going to look at the implied volatility for each one of the stocks or ETFs that I'm looking at more specifically. So because the VIX is a calculation of looking at the at-the-money puts and calls on the S&P, average 30 days, whatever. There's a formula for this. So it's a nice gauge to kind of look at the overall sentiment. But I'm still going to pick those stocks that are outliers, that are either very cheap or very expensive, look at their implied volatility, and that'll help me be able to trade the volatility. Because sometimes there's stocks, for instance, that have earnings coming up.
Right.
And you will have situations where, regardless of the VIX, the volatility starts to go up because you're getting close to an event that could cause a big move, and you can take advantage of that increase, and then the subsequent decrease also. They call it vol crush, after the earnings where they
which is hilarious. I can tell you the number of times I was on the old trading floor and people would tell me, "Oh, I bought these options on at the time it was Amazon. Oh, I bought the options on Amazon," and it did what they thought it was new. They beat earnings, but it didn't beat it by enough, and they paid so much for this option that even though they were right on the direction, it still didn't.
Yeah,
that's pretty cool.
I have so many examples of that. The very fact that I share with students that I know a lot of people that used to do before taking the class because they didn't know how expensive they were. Yeah.
Interesting one, Jose. I'm not going to go into the mechanics of the yield-powered market position. That's obviously going to be safe for the classroom, but I think it does tie into our discussion here. Yeah. Jose says, for yield-powered market positions, how would you define the call strike? Should we consider SPY for that or any other? Look, it's certainly going to be based off of an ETF, some ETF out there, and I think you kind of addressed it earlier, which was in that yield-powered market portfolio position, you're trying to define the rate of return that you need to fit that portion of your portfolio, right? And that's the whole point of strategic investors, saying I have this basket of long-term assets. I'm trying to grow my wealth over time. How do I do that? What's my targeted rate of return that I need? For you, it might be 5%. For me, it could be 15%. Who knows? It's going to be different for everybody. But once we identify that, we now need to build that mix of assets to help us achieve that rate of return. That yield-powered market portfolio position is just one of those, and determining which strike prices is obviously going to impact that rate of return.
Absolutely, and the one thing I'd like to point out, so I love that particular strategy. Yeah, definitely something that takes a lot of discussion, which we cover mainly in the XLT. In the class, we just do an introduction. But what I'd like to point out about that is you can choose like the SPY. You can also choose, for instance, another asset type, something to think about. Sure. What if you were bullish on gold or treasury bonds for that year? Or how about this one? How about using that interest from the bonds to do a bearish trade, to buy a put, to hedge your portfolio, to say, I'm going to pay for my insurance by using that interest. So none of those are wrong. It's just about your assessment and your prediction of what is going to happen based on the asset type you're looking at.
And there's a lot of variables in there. For those that have taken Strategic Investor, you've seen the asset allocation sheet it's robust. It has so many different columns and formulas in there that really is designed to help you understand, here's all that I have with regards to long-term wealth assets, and now how do I position all of those with historical rates of return to try to build out a portfolio that will achieve the rate of return that you need. It's a challenging thing. One of the exercises I like that you do in Strategic Investor early on in the first couple of days is establishing what everyone's rate of return is. And I would challenge every viewer out there right now, think of what is your goal? Do you want to buy a yacht? Do you want to retire with X amount of dollars? Do you want to give back to your church, your community? Whatever that goal is, it has a monetary value. And say, okay, with what I have today and that monetary value of my goal, what rate of return do I need to achieve that goal? Do you know? It shocked me when I took Proactive Investor, which is what we used to call it now, a strategic investor.
Yep.
Nobody in the room came even close to knowing what their rate of return. A lot of people were throwing out numbers there. Oh, I need 15%. One guy in the class needed 15%. He ended up needing 3%. It's like, wow, you're doing pretty good, brother. You're set. That's a huge difference. You need to take almost no risk, and you'd get to your goal. So how has it been for you? Because I know you do that exercise. Is it eye-opening for those guys in class?
Absolutely. And I always have the same reaction from the majority of students. By Wednesday and Thursday, when they start seeing all the pieces fit together, they're gonna say, man, I wish I had taken this class when I was in my 20s and 30s, because it really would have changed the way I thought of stuff. To have a goal of how much you want to make, and to really create your portfolio to match that goal that you need. Because if you're trying to achieve a rate of 3 to 5%, your style of trading is going to be very different than those that need 10%.
Right. And you can know right away, I don't need to take these kind of risks, and I don't even need necessarily expose the equity markets, which, if it does have a 20 or 30 or 40% drop, is going to kill a portfolio.
Absolutely.
If you have it, in less risky assets, then you will be more protected. Let's see, Chasbury, you said what markets offer options? Equity markets. You can do them on ETFs. You can do them on futures. You can even do them on currencies. The key there is not all options are created the same. There's liquidity issues for them. Some markets or some securities don't have an options market at all. So make sure that what you're trading is liquid enough for you to achieve your goals. Be careful out there, because some of them become very, very thinly traded. Patrick, tell me about your upcoming schedule. I know you're in Irvine teaching strategic investor this week. Where are you headed to next?
So after this, I'm actually doing another one of those tours where
a tour. You're going on tour.
Yeah.
We have T-shirts with all the stops and everything.
Yeah. So it's kind of cool. I love it. I was in Long Island previously a couple weeks ago. Now I'm going to New Jersey, so very close to where I was. And then I go to Florida for a couple of classes. I'm going to be teaching in Tampa Bay and Orlando, back to back. And that's coming up in probably, I think, 3 weeks, something like that.
So we got Tampa, we got Orlando.
New Jersey, and then I'm back to warm weather, hopefully, back to San Diego after that.
Oh, yeah.
So, I'm always excited to go wherever the need is.
And there's always people who need to learn this stuff. So thank you for the input. And guys, if you want to see Patrick Valle in action, you mentioned Tampa, Orlando, New Jersey, San Diego will be his upcoming stops. You can find out more information by going to powertradingradio.com, clicking the little Power Blast button there, or not Power Blast, I'm on the wrong topic. Click the free class button. It's on the top or the right-hand side of your screen. Type in your zip code. That'll tell you all the information that you need to know about which center is closest to you. Normally it would show up in social media today, but Joanne, she's out of the country, getting married today. So she will be back maybe in a week or two. So congratulations to Joanne on that one. Again, just go to powertradingradio.com, click that free class button. It'll get you all the info you need to know. Patrick, thank you so much for joining us today. I appreciate it. I hope you get some more volatility this week. Let's get those volatility spikes. Guys, we're going to take a quick break. When we come back, I have economic announcements and earnings calendar as well. So stay tuned. We'll be right back after a short break.
We've never seen a platform created with the driving principle of helping people consistently make better trading decisions. We know consistently successful investing and trading is about much more than simply taking advantage of the right opportunities. It's also about passing on the wrong ones. Click helps you score potential trade opportunities and calculate stop levels, customizing risk management to be in line with your personal trading plan. Click is also a smart platform. Because it links to OTA Student Portal, Click can serve a custom experience to every user based on what they trade, based on how they trade, their experience level, which OTA classes have been completed, and much more. Simple enough for new investors and powerful enough for the advanced trader, all while integrating OTA's award-winning education, tools, and services.
When we walk into a class and talk to students that have been trained by other platforms and now trading on Click, they're just ecstatic. They can't wait to have it all connected to live execution, which will be coming soon towards the end of the year. And everybody here is very, very excited.
I love it. Not only do I love it, everyone I talk to that's used it loves it. It's so simple and easy. Breaking down the process of core strategy to placing a trade is just phenomenal. And it really shortens the learning curve.
It's one platform to get familiar with that you can then apply to futures, forex, options, proactive investor. It's almost like somehow my thoughts have been distilled down into a sequence of steps. This platform, I feel that I could become an expert in a much, much shorter time, but with a great amount of confidence around actually getting to be able to get the screen to look like I want it to. The fact that Click is an online platform is unbelievable. I'm placing a trade that I'm comfortable with and I'm ready to go, bring it on.
Welcome back to Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com.
Welcome back to Power Trading Radio, everyone. It is your Monday edition, kicking the week off with all-time highs yet again. Things looking really, really good out there. What was interesting about the guest today, Patrick Valle, is there's a relationship or analysis that everybody should be doing. Obviously, we look at these markets and we say, hey, things are at all-time highs. It looks great. Just buy and hold and jump on that train. However, historically, over the history of markets, there's always this relationship between asset classes where all of a sudden one becomes really strong, say utilities or real estate, while others all of a sudden start to turn. And it's this sector rotation type of cycle. What was interesting about what he shared with us today when we looked at those perf charts and performance charts was you have very defensive market sectors like utilities, real estate, bond markets, and equity markets all performing incredibly well, even the dollar performing incredibly well. This is broken. Something there is not right. Now, I don't know what that means. It either means that the urgency to get into utilities and real estate is overdone, and we'll see that sell off and the equity markets overperform, or we'll start to see those equity markets underperform and some of those other ones like utility and real estate continue to move up as historically has been done. So very interesting point when he brought up, it's all about market analysis and kind of watching these things as they unfold. In hindsight, we'll know what the true answer was and which one of these market sectors was right. Was it the utilities being strong or technology? As it stands right now, it seems like the technology and the equity market side is the way to go, but that may change very, very quickly. You just never know with these markets. Again, if you want to take a class with Patrick, he will be teaching in Tampa and Orlando, Florida, New Jersey, and San Diego. If you would like to book a seat for one of those classes or any of our 48 physical brick and mortar schools around the world, you can go to powertradingradio.com, click the little button there that says free class. I think there's 2 of them. Click that one, type in your zip code. That'll tell you which of our physical brick and mortar schools are nearest you. There are 48 of them. Each one has free classes, paid classes, community events, and much, much more. All right, let's take a look at your economic calendar for Tuesday, February 11th. TJ's got the NFIB Small Business Index coming out for the U.S. markets. For the British pound, you have preliminary GDP, manufacturing production, good trades balance, and industrial production. Australia's got Westpac consumer sentiment. And then for New Zealand, a cash rate right now expected to stay the same, right at 1%. Of course, the RBNZ press conference after will give us some insights as to where they feel their currency and their markets are going. Moving on to Tuesday's earnings calendar, a lot. Dominion Energy, American Mobile, Exelon Corp, Hilton Worldwide, Southern Copper Corporation, Nissan Motors, Health Peak Properties, Arch Capital Group. And then it says futures markets. I don't know what's going to happen tomorrow. It might just be me on the show. Right now, I don't have a guest scheduled. I think tomorrow, Tuesday and Wednesday, we don't have guests scheduled, but I have a feeling we may have some surprise guests show up on the program, so we'll do the best that we can to fill those voids. Of course, again, you guys, sorry guys, I didn't get a chance to mute that one cough. I've been catching every cough except that one. If you have a specific guest or trader or somebody that you want us to analyze on the show, or not analyze, but bring on the show, let me know who that is. You can send it in at powertradingradio.com. Maybe I'll try to get them booked for tomorrow or Wednesday. Until then, hope you guys have a fantastic trading day on Tuesday. Careful out there. We've got some pretty lofty markets. Could be some nice whipsaw action going on tomorrow. Till then, happy trading, everybody. We'll see you tomorrow.
You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.